Hello, guys. Welcome. Good evening from West Africa. This is the bread behind Wex FX chat, Wex himself talking. You're all welcome to my channel, Wex FX channel. We deal in currencies using technical analysis as our approach, with the core basis and basics on supply and demand imbalances, trend lines, Fibonacci, and a bit of market maker. So today, I'm just gonna open this channel with my view on the pace I mostly trade. So today we are gonna look at our analysis for next week on gold and pound USD. So let's begin. We move straight to our weekly time frame. On the weekly time frame, this is gold on the weekly time frame. This week, we had a strong bearish move in the market to fill this week created in the last 4 weeks. This week opened on the 29th of September. So they just ended the week, had a significant drop to fill the week due to the trade war issue that is currently going on. So let's see. First of all, with our approach, we mark the zones. That's our first zone. So we look at our supply demand zone. So this is our supply zone, and this is our demand zone on the weekly time frame. We have a minor zone here, which currently price has dipped into. Let's see. Okay, price is yet to dip into the zone. So we have a zone here. This is our weekly. So we move straight to the daily after marking our zones on the weekly. So on the daily, you can see where our zones are. We can further fine-tune this zone on the daily to where the buy or the buyers are, which is the exact demand zone as per our strategy on the daily time frame. So price is yet to dip into the demand zone on the daily. So on the daily, we still expect some bearish momentum towards our demand zone. We bring in our trend line on the daily. That is our bearish trend line. Now there is a channel. So let's see. That is our channel. So currently price is trading in a downward channel. So far market is creating higher lows, lower lows, and a bit of lower highs. In general, the market is trading in a bearish channel on the daily. So we expect price to further dip down to test the lower end of this channel, which precisely we are looking forward to a dip into the zone, a little bit weak on the trend line, then we experience some upside move on the daily. So in summary, the general overview on gold, we are expecting a continuous bearish momentum to test one, the zone, the diagonal zone, which is our demand zone. Then some momentum drop to test our lower boundary of this channel. So in the WexFX chart community, we are looking at a sell, then we start looking out for bearish rejection and some candles price action pattern denoting a rejection to the upside, then we can buy. So a sell to test the zone, further to test the lower boundary of the channel, then a pullback to the upside on the daily time frame. We can switch to the H4. So you can see on the H4, our zone on the daily confluences with our 800 EMA. So it shows a significant argument that there is a possibility of price rejecting in this daily demand zone. So as usual, we wait, get our price action patterns and join the continuation, or wait for a price action pattern, then we join the rejection to the upside. That is our perspective on gold. Now, Pound USD. The chart is a bit dirty because we have been trading this for a while now. So let's focus on the current situation at hand. All right, we move to our weekly time frame. So price tapped a supply zone on the weekly. Let's take a look at it. Here we have a supply zone there on the weekly. So price tapped the supply zone. So you can see that is our supply zone. Price has tapped that zone. So that is our supply zone. So let's take a look at our demand zone. Previous week closed super bearish. If you take a look to your left, you realize that price is reacting to this point. Currently, that is where price is seated. So we are expecting a little push to the downside, then a correction to the upside. So now let's spot our demand zone. Where is our expectation? Where are we expecting price to bounce off? So if you take a look at here, there is a zone there on the weekly. So we switch to our D1. There you go. As usual, we try to fine tune our zone. This is a big zone on the daily. but that is our zone. So ranging from 1.2652 all the way down to 1.2514. If you take a look at this, price has broken the neckline. This neckline has been broken. That neckline has been broken. So we can get a pullback up to this price level. So basically what am I expecting? We are still bearish. So we are expecting this that is what we are expecting. We are expecting price to retest the broken neckline, then fall all the way down to this price level. 1.2652. So any point within this zone, our expectation is to the upside. So irrespective of our directional bias, one thing is key, our patterns. Our pattern is key. So let's take a look at H4. The last 2 4-hour candle closed as a strong bearish candle. So I expect a gap to the upside, then a continuous sell. Meanwhile, there is a small bearish channel here. So technically, price is at the lower boundary of the channel. So we could have this as stated on the daily. So we are looking forward to a gap, then a continuous bearish momentum on the pound. So ladies and gentlemen, this is our view, perspective on these two instruments. On Tuesday, we will upload our intraday analysis on the same page so that you can take advantage of our live analysis and market on the go. Thank you very much for taking out time to visit our channel. Thank you very much for taking time to go through our perspective or our projection on these two instruments. Stay blessed. See you during the week. Peace.